All right, welcome everybody here at TheoTrade. It is March 15th, 2016. This is the Theo Night video. My name is Don Kaufman. I'm going to take you through what the markets did today, or better yet, what they didn't do, because they don't want to do anything prior to all the news that's coming out tomorrow. So the FOMC meeting kicks off today. Yes, that's the portion of the FOMC meeting that you are not invited to. Nevertheless, what are the markets doing? We have just about 8 minutes to go to the close, and you're seeing the S&P futures. They're down a whopping 6 handles over here. Ooh, another very tight range, kind of an inside day. The NASDAQ futures are going to finish massively unchanged in the trading day. I mean, even the Dow futures. 8 points, really? However, there is weakness out there. What's going on inside of the Russell? All right. So even though I kicked it off saying, no, there's nothing going on, I'm actually picking up on a lot more going on than probably meets the eye. And that's one of the reasons you guys tune into the Theo Night video. First and foremost, yeah, the Russell, it's weak over there. But let's just say that that happens to be a bit of an anomaly. Okay, let's just say that the Russell, throw it aside over there, it's down 1.6%. I don't necessarily think it's an anomaly. Now, the bonds, they're not really reacting to anything going on inside of the marketplace. It doesn't surprise me because tomorrow is all about the bonds, right? The FOMC announcement's going to be all about the bonds tomorrow. So the bonds, they've had a lot of chopped out trade today. And again, not a lot of conviction on either side. I've scalped a couple of bond trades in and out today and throughout the course of the trading day. Nevertheless, the one thing that I've kind of keyed into here, the advanced decline line throughout most of the day, and this is the S&P 100, it's been rather weak. Now, okay, so 63 decliners isn't too substantial over there. Rather weak with the S&P's down 5 kind of makes sense. But here's one that's been a little bit more surprising. So clearly we see the Russell getting smacked down a little bit. The NASDAQ 100. Now this does surprise me. There are 72 decliners in the NASDAQ 100 with it almost unchanged. That's because, again, you're getting strength out of a handful of stocks that are really driving the NASDAQ futures. Apple's one of them. Facebook happens to be up on the day. Netflix is not really ones I key into, but Google, pretty much unchanged today, but Amazon. But again, from an advanced decliner standpoint, you have, over the vast majority of the stocks in the NASDAQ, relatively weak. So there's this underlying theme of weakness, and I saw that a little bit yesterday. All right, so let's switch gears for just a moment and stop trying to read into every, tick along the way over here. Because again, tomorrow, what do we got? We got a tremendous amount of news tomorrow. One of the first things you've got is you got the petroleum report. Okay. Yes, there's housing starts in the morning. And again, the market right now is seeking anything it can get its hands on. All right. It's a catalyst driven marketplace. So you got housing starts. Okay. Consumer price. A few things, again, about an hour prior to the open. Then we actually come to the open at 7:30 my time. That is 9:30 Central. Yes, it's bright and early here. I'm on Pacific time. The petroleum report, that's the oil report. That's always a fun one. And then, oh, don't forget, at 1 p.m. Central time, we will get FOMC. Okay, the meeting. What do we expect? Absolutely nothing. However, there's always a statement in absolutely nothing. It could be 360, dire words to the market. Market listens. Obviously, we get some action off of that. One thing you got to kind of take a look at here before going on about the FOMC. Look at some of the expected moves, okay, coming into this announcement, and they're not drastic. They're not crazy over there. The expected moves, but $18, $20. Again, nothing too considerable. One thing I do want to mention, tomorrow morning, okay, at the open is a VIX settlement. So don't look at the VIX at the open. If you do trade during the trading day, the VIX could have kind of an obscure print. Don't get too surprised by it. Again, there's a volatility settlement coming tomorrow morning. Now, let's switch gears a little bit here. Let's talk about a trade that I have on an intraday basis. And that trade happens to be a trade inside of none other than Apple. Okay, now the trade I'm trying to explain to you, is more of an intraday trade, but I thought it was pertinent in a marketplace that's much about nothing right now. In fact, as I'm talking about this, I realize I have 3 minutes to get out of my trade, and you're like, oh, get out. So I just own those contracts, and I'm just going to, by the way, I'll never sell something, okay, at what the market is. So there's the market of 263, 269. I'll come in here and carve up that market just a little bit. All right, so I put that offer out there at 265. You can see there I am, 265. Okay, I am the offer. I just filled. Excellent. What did I just do there? Well, I'll explain it now that I've gotten out of the trade. And yes, I did one contract to explain the strategy. And to be quite frank, I didn't have much profitability on this contract. However, I think it's an excellent learning curve for those of you that have ever been interested in trading on an intraday basis. Ultimately, Apple on an intraday level, it opened up substantially. It was on news. Okay, so I'm going to go over here just to a 1 minute chart. Again, even if you're not intraday trading, bear with me. If you're not into intraday trading, that's fine. Okay, it's fine. But I think you're going to learn a lot from this. Strategy in the market is everything. Okay, what you think has to be secondary. So one of the things that I did this morning was right out of the gate, for the most part blindly, okay, I bought an in-the-money put on Apple. So basically I got short Apple. I could have shorted the stock, buying in-the-money put, it's the same animal. Okay, so I shorted Apple. Why? Did I see something in the chart? Who would be crazy enough to short a stock when it's up $2? Well, me. All I had to do was look over, okay, on thinkorswim at the trade tab and recognize that over the next 3 days, the expected move was only about $2. So if the stock opens, all right, and right out of the gate is up almost a full $2, I thought to myself, well, look at the risk reward of that. Okay, think about it. So the stock right out of the gate is up about $2, and that's already taking it to the edge of the expected move for maybe a 3-day period. So at that point in time, I say, I'm going to short it. Why? Why do I short something that's up $2 in the face of adversity of the marketplace? Because I think to myself, what a great risk reward. So if the stock's up $2, how much further can it go? Can it go up another 50 cents? Sure, absolutely. Could it go up another $1? Sure, absolutely. And you start to actually go, okay, check. I get what you're saying over here, right? So here's where, again, the stock's up about $2, so I get short right in this neighborhood. And let's just say I get short 100 shares. And you think to yourself, well, it's already up $2. How much more risk do you have to the upside? So let's say on a crazy day, it goes up another $1. So that would actually put the stock up a total of about $3 in this neighborhood. Okay, and by the way, it never fully got there because you can see the high of the day. All right, the high of the day was 105.18. It's up, it'll close up $2. Okay, and there is the bell. So let's say it can go up as much as $3. Well, I'm already shorting it when it's up 2. So what's my max risk to the upside? Okay, probably about $1. But what's the downside potential? Okay, the downside potential, again, max upside potential is maybe $1 a risk. Well, Apple could have given back the full $2. For all I know, if it fell $2, could have fallen $3. You gotta love the risk reward of certain trades. And these setups, they come every single day. So when a stock opens up, for instance, big, right, and you're looking for like opportunity, like, oh, I'm going to jump on the bandwagon, and it's up big over there, and I'm actually shorting into it, it's because, again, it's already moved, all right? And a stock with the market cap size of Apple there, moving $2, is quite significant. It's a move that it isn't expecting for an entire 3 days. So that trade, whether it worked or not, neither here nor there. You have to do the same things again and again. It's about occurrence after occurrence after occurrence. Okay? It's not about doing one trade. You do the same things, okay, and build the same strategies in smart logic. You're going to be successful over time. And going out and shorting something on an intraday basis, it's up $2. It's got good logic because, reasonably speaking, it kind of factored in, well, maybe it goes up like another 50 cents. So I thought to myself, I'm at 50 cents of risk to the upside, where I had at least $2 of downside potential. And why wouldn't you get into a trade? Regardless of what you think, why wouldn't you get into a trade where the risk is 50 cents, okay, and the upside potential was about $2. And you'd say, you know what? I would do that trade, and I would do that trade all day long. And that's exactly why I did just that trade on Apple. What happened to it? I ended up breaking even on it, which is great. Excellent. Okay, because I'll do it again and again and again and again. We'll get them again next time. Trading's not about, one occurrence. Again, it's about thousands of occurrences out there. A couple last things. Again, watch the announcements tomorrow. FOMC announcement, 1 o'clock Central Time. Watch the oil report in the morning. The other thing, tomorrow night, that's Wednesday, March 16th from 8 p.m. to 9 p.m. Eastern Time, right here at TheoTrade. I'm going to talk about good trades gone bad. So, hey, questions keep coming up. Will you fix this? Can you fix this? How do you fix this? Well, that's exactly what I'm going to talk about in tomorrow night's coaching session. For those of you that do work during the day, yeah, we do coaching sessions every Wednesday night. Some of those Wednesday nights we'll actually do a full-blown class. The difference between the class and the coaching session, classes are a bit more formal. The classes include very detailed criteria. I usually have, 50 to 100 slides. Okay. Tomorrow night, the coaching session, the good trade's gone bad. We're going to have some fun with it. And you guys are going to come in there and you're going to give me your bad trades. So every trade is good when you put it on until, of course, you look at it about a week later and you're like, oh, that thing is just a train wreck. Let's see if we can't discuss that a little bit, get a better understanding of, again, those good trades gone bad. Thanks a lot, everybody, for joining us here at TheoTrade. I'm Don Kaufman. I will be back all day tomorrow. Have a good evening. Bye-bye.